Hey everybody, it's Doug Shoemaker here with the Shoemaker Loan Team at Homestead Financial Mortgage, coming at you on this Tuesday before Thanksgiving with what was going to be your 1 Minute Monday, but since I'm a little delayed, I'm guessing we're going to call this one 2 Minute Tuesday. But each week, I'm going to try to give you the market moving mortgage news in and around 1 minute for my friends that just want to know what time it is. And then I'll go into a bit more of a teardown, a deep dive for my friends that like to know how the clock works. So first, I just want to give a quick thank you to many of you out there because you either helped me feed my family through our loan business, or maybe gave us some great advice over the last year, or helped us move the needle with Midwest Wingfest or the Home Foundation. We're very, very grateful for every single one of you. And yes, if these updates, if they're saving you money or they're helping you move the needle a little bit, please like and subscribe. And if they're not, please forward them to somebody that they might help. Keep in mind, when you refer the Shoemaker Loan Team to a friend or family member, when their transaction closes, I'll make a $250 donation to a local 501c3 nonprofit charity of your choice. This is a really, really easy way to help a friend and a cause that you're passionate about all at the same time. Oh, and you might be helping me and my family as well. Anyway, let's go ahead and get to it, everybody. The quick cliff notes for my friends that just want to know what time it is. Well, stocks and mortgage bonds, they're both pushing higher to start this shortened week. The longest government shutdown ever actually delayed all kinds of stuff. Jobs reports, CPI, and almost every major report that the Fed needs until after the Fed meeting on December 10th. New York Fed President Williams actually said on Friday that labor weakness now outweighs inflation fears. December cut odds, they literally went from 33% to 77% really overnight. Now, mortgage bonds just broke above that 50 and 25-day moving average that I talked about last week being so pivotal. Now, the 10-year, it's eyeing that 4% range as well, and rates are definitely starting to drop back down to the lows of the year. The 30-year conventional hit 6.32 yesterday. FHA was 5.91 and VA was 5.93. For the refi alert, I'm kind of sticking right around that 7% range for right now. At that pace, you're probably leaving some money on the table based off what you could have as your monthly payment right now. Reach out today and I'd be glad to go over that with you. If you're in the high sixes, but you've got great credit, great equity, it might be time for you also. Feel free to reach out. That's pretty much it for the what time is it, people. Now for my friends that like to know a little bit more about how the clock works. So the shutdown pretty much turned the data calendar into a dumpster fire. October and November jobs reports, they're not coming out till December 16th. October is going to actually be completely missing the unemployment data, which is pretty important data for the Fed to make a decision on cutting the Fed prime lending rate. October CPI was completely canceled. November CPI is not coming out until December 18th. QCEW now not coming out till December 19th. PCE and GDP, who knows? The bottom line here is the Fed's walking into their December 10th meeting kind of half blind because they just don't have the data they need until after that meeting. So last week, the market had basically completely priced out a cut. Most of the very, very respected real estate economists that I follow had all pretty much said a December cut is off the table. I actually had told a handful of folks that a December cut is not happening. That was until New York Fed's John Williams actually stepped to the mic Friday and said labor weakness is the bigger risk right now over inflation. Markets heard that, and boy, they ran with it. Odds went from 33% to over 77% and climbing that we'll see a cut in December. Now, this week's calendar, everything got crammed into 2 days. On Tuesday, we've got PPI, retail sales, pending home sales, FHFA, Case-Shiller, and home prices. And then on Wednesday, we've got mortgage applications, durable goods, jobless claims, and beige book. Thursday and Friday, well, Thursday the market's closed. Friday they're going to close early. So there's not going to be a whole lot of information coming out Thursday and Friday. For the technical picture, bonds are back in the driver's seat. Mortgage bonds just punched above that 50 and 25-day moving average, and they're testing the 101.17 ceiling that rejected us at least a few times last month. Now, clear that, and the ride gets to run a little bit fast. Now, the 10-year yield sliced below both of those averages, and it's got a clear shot at that 4%. The stochastic momentum, it's still pointing towards lower yields as well. The translation here, higher bond prices equals lower mortgage rates. So Here are the current rates from Mortgage News Daily. And remember, Mortgage News Daily, these are national averages. These are folks that have 780 credit scores, first-time home buyers, a 25% down payment. I think it's a $240,000 loan amount they're looking for. Those are some of the guidelines. Oh, and the national averages also include a lot of states where it's customary for people to pay discount points. This is not a market where you want to pay discount points. I'll be glad to explain that in greater detail later. But anyway, for right now, the 30-year conventional based on those national averages, that is that 6.32 that I had mentioned earlier. The 15-year was 5.8. 30-year FHA 5.91, 30-year VA was 5.93. So again, those are national averages. If you'd like to figure out what rate you qualify for, or if there's any credit optimization or anything like that that might help you get the best possible rate, reach out. We'll help however we can. Now for lock or float advice, we're pretty much in a floating status across the board here. But if you are closing after mid-December and it's a refinance, riding this wave does still make sense. So go ahead and keep floating that thing, but make sure and stay within arm's reach or keep following up with the Shoemaker loan team, because today and tomorrow's data, it could flip things really fast as we've seen the last few months. So for the weekly refi alert, I want to give you a little bit of an example today. On a $320,000 loan, dropping that from a 7% interest rate today to just 6.375, that saves about $130 a month and over $47,000 in lifetime interest. Most of this without having to pay any money out of your pocket because the costs are rolled into your loan. Now, even if you currently have a rate in the high sixes, it may be worth a quick look here because, like I said earlier, if you've got 780 credit scores, great equity, good debt ratio, all the things that they're looking for, you might have more benefit than you think. And for a lot of my friends out there who have had $200, $300, $400 a month in savings, but they were waiting for this big Fed decision because it was going to drop rates so dramatically. Like I said, the Mortgage Bankers Association, Fannie Mae, Freddie Mac, they're all predicting rates to stay in the low sixes throughout the next year. So it might be worth having a conversation around what your savings might be today and maybe whether it's worth going ahead and getting that savings locked in until the market updates. So if you'd like, if you're currently going through a current process and you just don't know how to read that loan estimate, nobody's really showed you, always feel free to upload that. You can email it to shoeteam@hfmloans.com and we'd be glad to take a look at that for you. So it is now time for the family hack of the week, which it's an overnight breakfast casserole, and it's a Shoemaker family favorite. So you get to assemble the thing the night before, throw it in the refrigerator, and then in the next morning, on Thanksgiving morning, while you're still in your pajamas, breakfast is going to be ready before the parade even starts. So I'll have that full description down in the recipe for you. And yes, this is something we make just about every year. So, hey, that's your pre-Thanksgiving update, folks. Markets are closed Thursday and only a half day on Friday, but my cell is still always on if something crazy happens. Now, to my military, law enforcement, and firefighter friends out there, a very special thank you for everything that you all do, especially over the holidays. While we're sitting here relaxing and overeating, you're out there literally helping keep us safe. So whether you're on duty or off duty, I just want you to know that we are forever grateful for you. I'm Doug Shoemaker, and I want all of you to know how thankful we are for you. If there's anything that we can do to help, please reach out. Otherwise, I hope you have an incredible Thanksgiving. Hug your people, eat too much, and we'll see you on the other side.